Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Busy show. We've got earnings galore this morning. We're going to recap the Sohn Conference off the hop and the biggest moves off of that yesterday. I want to talk about Amazon in-car delivery, so we'll get to that as well. And we have one guest today, but I'm going to play two interviews for you. One interview. So our guest is Nick Chahine will join us at 8:35. And then at 9, I'm going to play an interview that I recorded yesterday with Scott Wapner. It's about his new book, When the Wolves Bite, about the Acme Icon Herbalife saga from a few years ago, or really from most of this decade, you could say. So I'm going to air that at 9. That was like a 20-minute conversation we had yesterday. It was very nice of him. He stepped out. He was at Sohn. He stepped out to talk to me about the book. So appreciate that. So I'm going to air that at 9, and that'll be the wrap of our show today. But
did he tell you how much he likes the Benzinga Pre-Market Prep show?
No, he did not. I asked him like a leading question about that, and I didn't really get what I was looking for. But real quick, before I throw to Joel, I want to remind you folks that the Benzinga FinTech Awards are coming up May 15th and 16th in New York City. If you go to benzingafintech.awards.com and you enter the promo code PMPVIP, you can get a $200 off ticket, bringing the price down to $297. That is valid until the end of the week. Again, that's benzingafintech.awards.com, promo code PMPVIP. Joel, what is doing in the S&P?
Oh, we got major green on the screen. SPOO's up 1575. Just bottomed right at your double close area. 71 quarter, 71 and a half, 71 a quarter is your low. Pre-market high, 88.50. We still got some more work to do on the upside. We got some highs. Friday's high is up at 98 and a quarter. You have the intraday high at 94.75. So let's see what happens if we can climb into that mid 2690 handle. Bitcoin, Dennis made a great call on this one, up over 9,000, up $430. We're talking futures here at 9,310. Just a quiet rally here. Crude got a nice pop off the 230 cash close. We hit 69.33 overnight. High of the move is what you need to know about that, folks, and that is 69.55. Gold in the green by 440, 1328.40. Silver in the green by almost 6 cents at 1665. Let's bring in Dennis here, who is just all over the markets until 8 p.m. last night, and I should have been listening to him. There was some strength last night, huh, Dennis?
We should have been talking last night. You would have reminded me to cover my hog. So anyway, I'm short HOG. And I said to myself, there was an offer last night. I think it was like 41 a quarter. I was like, I got to cover this before the 8 o'clock close because I don't want to go through earnings. Well, when you get 30, 40 positions overnight on, you're trading like crazy. You just forget about positions. I totally forgot about my hog position. Anyways, this morning I come in, I look at hog, and I was like, why am I down in hog? Why am I in hog? It's like, oh, no, I forgot to cover my hog in HOG. And of course, Joel, when you forget a trade, it's never, ever going to work in your favor. So, it's kind of a coin flip. Hog can miss, and I would think hog would miss probably more than they're going to beat. I mean, that the stock's been a dog. But in any regard here, I forgot my hog short on, and I had to cover this one. And so I did get out. Okay, I got out at some of 42 and then some of 42 and a half. It's over 42.75 now. So I guess it's a get out, but disappointed that I forgot my hog short on when I was supposed to cover 41 and a quarter last night.
And let's see here. Have we used this pun? You're getting slaughtered in hog?
No, I don't think so.
Okay.
So
that
I guess applies today. Hog's a big loser.
And as I said to you
on
the pre-market show, every day we have to listen to you complain about a bad position. Why can't you just
Everybody must think I'm about like a big losing trader because all I talk about is my losing trades. I like to complain. You guys are my sounding board. So, like misery likes company. So I like to complain about my losing trades. I don't talk about my winners. I only talk about my losing trades. I'm exact opposite to what everybody else does in the media because, when you see a guest go on CNBC, all they do is, they sold the top in this, they bought the bottom in this, and they're all geniuses. Well, I'm the opposite. I guess I buy the top and sell the bottoms, which we know I didn't snap. I still sold the all-time low in SNAP. Nobody's ever going to beat me on that one. What was that price? Wasn't it like $11 or something I sold?
I think it was
my
like
SNAP?
$11.35 or something like that.
$11.28. I touched the all-time low, never to be touched again. I am the worst trader possible in SNAP. Nobody sold it worse than me.
But there's some people that bought it worse. I mean, that thing made a high 29.44. But we got a lot of earnings reports to cover. This is the heart of earnings season.
But let's start with the Sohn real quick.
Sohn? Okay.
Yeah, let's just do a quick Sohn recap.
Do that. Because I agree.
There wasn't a ton.
I concur.
Okay, great. There wasn't a ton of intraday movers. A lot of the managers speaking at the Sohn Conference were, mentioning big names, Facebook, Tesla, Google. A couple that jumped out to me. The big one was the last one. The keynote essentially was David Einhorn, who came out against Assured Guaranty AGO. He is very concerned about their exposure to Puerto Rico and their credit rating, and AGO got hit on that news or the commentary.
Yeah. Assured Guaranty, Einhorn is not sure about, there's a pun for you, about the Puerto Rican exposure there, and came out very bearish, and stocks started going down. I was trying to sell too, and Benzinga Pro, props to them because they've got, they were all over it. I mean, I was just had the Pro for the updates, and they were all over it immediately on all of these. As Sohn, as people were talking and obviously talking about different issues, they would post in the Benzinga Pro, and as soon as it was posted to Pro that he's making a bearish case on AGO, I tried to short it. There was nothing to hit. I mean, there was no bids, and I go like 35.5. Somebody goes 35.40. Another person goes 35.30. I'm trying like 35. Come on, somebody lift me. Not happening. And then ends up trading down like 34 and into the 33 handle. So that's a little bit too far for me. I would have sold in the 35s, but I wasn't going to chase it into the 34s, and I definitely wasn't going to chase it into the 33s. But when you get these smaller issues after hours, there's just no bids. So it's a matter of trying to find somebody to lift you. Good luck. It's one thing to be able to hit a bid that's sitting out there, but it's another thing when you're trying to get somebody to lift your offer on bad news, because Joel Elconin taught me way back in 1999 that nobody lifts offers when it starts going down.
You should have just locked it down at like 34 and a half, with 5K, and they would have ran from you. But I just want to make a general comment on, trading those kind of events. I've just never had a lot of luck. And, when we traded it Bright, I mean, I don't think it was, I don't think it was that. Did they cover the Sohn Conference? It's been going on for a long time. I know that. But, man, you really got to be quick. You really got to have an edge. And, for me, just piling into a stock, just because someone likes it or doesn't like it, I need maybe for a scalp or anything, but you got to be a really good trader, especially doing this in the after hours, like, Dennis attempts, or in the pre-market. So I don't know if you do that a lot, maybe take a look at your last 10, 15, 20 trades and really see if you came up on top, because there's people that are short something like that want to bring it in. There are people that are long it if something's going up that want to sell. So a lot of different scenarios. I will cover the stock. I'll just tell you that they hit it down to 33.65. You're $1.60 above that. You had a low in February, 33.70. So whoever was looking at their charts from February 9th got a good buy off. We'll see if that's tested this morning.
I mean, I think there's a trade longer term to fade a lot of those moves, because it is just an opinion. It's not moving on company fundamentals. It's moving on an opinion. And more often than not, I guess analysts, all your ratings are opinions too. But more often than not, it seems like when, you get a 7, 8, 10% move in a stock because Warren Buffett, just bought it and it pops 10%. It seems like these are short-term fades. And it's nothing against Warren Buffett. It's just the fact that there's nothing different, fundamental about the company because Warren Buffett bought it. It's an opinion of a major manager that likes the stock, so that's going to help to push the price. But it seems like these things do come back in. And I'm not surprised AGO has bounced from those lows. I was actually trying to buy it. Once I couldn't short on 35s, then I was throwing out bids at 33. I was like, they want to get silly and they want to go to knock this thing all the way down to $33. I'll buy it. And obviously I was looking at that 32.97 low, Joel, from the 12th, making me feel more comfortable, but it never got down there. So I was one of the only people bidding at one time 33, and then I was getting scared when it's coming down 34. I was like, maybe
That's
I'm
funny.
too high. But
funny.
anyways, so I actually provided support even though I never got filled.
That's good. The other big one, and I see that's mentioned in the chat as well, was Box. And that one caught a bid yesterday because let me get the manager now.
I can't. If you can pronounce his name, I'll buy you a cup of coffee.
Okay. Challenge accepted.
Brett.
Chamath Polyhopatia. Brent says I got it. All right.
There's coffee in the
Polyhop. There's coffee.
No, so anyway,
you got to watch Joel on those bets.
Yeah, I know.
He hedges himself.
He's
He knew the coffee was over there already.
He's sneaky, and he said the magic words with regards to Box, which is it's his favorite way to play artificial intelligence, and those are the magic words.
I mean, the stock got a pop. BOX yesterday intraday, you can see when it took off, when those comments came out. So that's why you got to pay attention to your pro on this. I think it's just happily trading at 20.50, not much going on. Boom, mention that Sohn, we're 23.50 in like seconds. Like these algos that are reading this stuff, they are fast, man. So anyways, and obviously we settled here at 22.91. Again, the stuff's opinionated. This kickstarts it. I mean, it's kickstarted on the chart now, but it's up another 40 cents here today. This is the definition of chasing, guys. I've never made money chasing stocks. My 19-year career, I've always lost money chasing stocks. So just like dogs shouldn't chase cars, sometimes traders shouldn't chase stocks.
That's a new analogy here. And just two things to illustrate my point about, being involved in these kind of, trading news or whatever. If you were looking for a gap fill in Box, okay, and you got caught in earnings and you gap down, you had an opportunity to have that gap filled exactly. There was a gap between 2083 and 2383. You got a print at 2395, and then you backed off and closed a buck lower. So once again, there's using the news, there's using something, not necessarily to initiate a trade, but maybe to exit a trade. So that when I'm looking at this today, I just want to see it stay green. The all-time high, boom, was made the day before earnings at 24.50. That's a big number as well. And just to illustrate Dennis's point about chasing and jumping on news, what if you hopped in Teva on that day when it announced that Warren had a stake?
Oh, terrible. They bought the top.
Yep. And then you found out.
It literally topped out the next day at over $22. Now it's at 17. I think, from a swing trading perspective, I honestly think they're fades. Most of these moves are usually fades. From a day trading perspective, sometimes it can continue for a day or two. So it's not just automatic and go in there and fade it right away. You're going to make money. But I feel like they're fades longer term. Even going out, a month or two, dust settles, these things kind of come back to where they were. So great point on the Teva. It's a great example.
And then you found out that it wasn't even his idea. It was one of his side managers too. It wasn't the Teva. Yeah. Did you see that?
Charlie?
The Teva.
It was not Charlie, but it wasn't Buffett either. It was one of his analysts.
It's his secretary.
Who's replaced him? So, okay, here's a question for you. When Warren Buffett, we like to talk about stuff like this, but he's older. Who's going to be the potential replacement at Berkshire Hathaway? If Warren Buffett finally decides to, take it easy, or which he's never going to do, or in the worst case scenario, doesn't exist anymore. Who replaces? And obviously, Charlie's pretty old there too. Who's going to replace him?
Well, he's got he's had the same employees for 20 years. So
do we know who the next guy in charge is going to be?
No, I couldn't tell you, but I know
Charlie's old too.
Yeah,
Charlie's 94.
I watched.
Is Charlie 94?
Yeah.
I don't know if you watched that documentary, Being Warren Buffett on HBO, but he's very proud of the fact that they have the same employees for a very, very long time. So whoever replaces him will have been there for decades.
Dennis, I think
hit to that stock the day that Warren steps down for whatever reason, because there is a premium put in on the Warren Buffett premium. So That's one thing I've always been scared about Berkshire. How old's Warren now?
I think he's like 86 or 87. Do you know where Charlie?
It's those 6 Cokes a day.
He's 87.
I mean, he
87.
drinks 6 Cokes every single day, and he's 86 years old. Who says Coke kills you? Coke, it's all that sweet, all that sugar in his system just keeps him running.
What a segue.
And he has McDonald's sausage something for breakfast every day too.
He knows how to live it up.
What a
he lives life to the fullest. 6 Cokes a day.
What a segue.
That's got to be a bad.
What a segue to those Coke earnings that we got this morning.
Okay,
so
one more.
Yeah, there you go. Look at us. We're good.
Where did Charlie go to undergrad? Where did Charlie Munger go to undergrad?
Coke to. It's 16 minutes into the show in the heart of earnings season, and we haven't really talked
I know.
about
I'm trying to get us
yet.
back on track. And
We haven't talked Google.
Get
None of the earnings. Get us to earnings season,
I'm
Spencer.
trying.
Good segue in.
I'm trying. Coke. Okay, 47 versus 46 cents per share. Sales of 7.6 versus 7.3 billion dollars. They're also on track to hit all their fiscal year targets that they'd previously given.
Rumor has it that Warren started drinking 7 Cokes a day just to pump his stock.
All right. What about
Rumor.
Coke?
Okay, so this is a stock that hasn't been doing anything. So all it had to do is not completely blank the bed, and it was going to go up. And here it is. It's okay. It's an okay report, and stock's doing okay this morning. We'll just say that. I'll say 45 though. Up there, that's major resistance.
Okay, I put that in the chat at 8:16, Dennis. I said, Dennis.
I read the chat, Joel.
I said, Dennis is going to say resistance at 45.
And I steal your content.
Okay, pre-market high is 44.78. 45, you got a couple highs there. 44.97 and 45.03. That's buffeted by a 44.89 high. I'd say even 57 cents up here is like a huge move in Coke. So I don't know. I don't think we're going to get there today. Opening print also will be very important in Coke. You open up at where are we trading? 44.77. You take 90, something like that, and then you come back through the open. I wouldn't want to be long the stock.
All right. Let's talk Google from last night. This stock pops $50. It pops. Yeah, is it 50? Yeah, my math is right. It is $52. It popped last night on the earnings report. 15 minutes later, it was trading red. So if you were quick on the trigger, you could have had a short off, I guess, in Google and made some money. And I'm sure some people did. Not me, but give us the numbers here, Spencer. And wow. Volatility last night.
The adjusted number was $9.93 versus $9.31 estimate. Sales $31.15 billion versus $30.31 billion. So beats on both those numbers. And also, as Joel pointed out in the pre-market show, they spent $7.5 billion on capital expenditures last quarter.
Wow.
They spend money to make money. Got to spend money to make money, Joel.
All right, that big pop took you to 11:15:36. I'm looking at the GOOG without the L. Man, what did you have to lean on there? Not much. 11:21.99. But
it's hard to come in there short. It looked like a pretty good numbers.
Yeah, I think people a little spooked up that $7.5 billion CapEx expenditure. Let's see here. We're trading at the lows of the pre-market session, right around 1061. Seems like you have a buyer 1061, 1062 for now. I don't know. I see a gap in here. Maybe I'd get more interested if it could fill that gap and get down to the 1040 level. So we'll see if that comes into play today.
I think this is definitely one of those cases where, because the first number that came through on the wires was,
I saw $13.
Yes, 1333. That was the first number. So I think that's why we got that pop.
Then he's get the adjustment.
Yeah.
I was like, $13. My mouth dropped wide open, and then the stock just exploded. Anyways, I was like partying because obviously I'm on Google shares. I was like, yeah, baby, go Google, go. And then 15 minutes later, I was disappointed.
But yeah, that did not compare to the estimate. So not quite. Okay. What's next? Verizon, you want to go to?
Yeah, it's here. It's all the dogs are barking here this morning. VZ been a dog too, but not this morning. Trading up 3%. Spencer.
Yeah, $1.17 versus $1.11 on the EPS. 31.8 billion in sales versus 31.22. So slight beats on both those numbers. They're also reaffirming their outlook for the fiscal year as far as sales, EPS growth, and all that good stuff.
Trading up nicely over $50 here this morning. I thought about trying to short it through 50. Truth be told, I did actually, and then I regretted it right away and covered it. So I think I short like $49.99. I was like, I'm scared. I covered 50. Anyways, $50, 130,000 in the book at 50. So you say, well, how is it trading? You know, just a little more education for people who are just new to the show. How is it trading at 50.29 if there's 100,000 in the book at 50? Because that liquidity doesn't come active until 9:30. So in the New York book, there's 130,000 shares that will be selling at $50 come 9:30. So if there's doesn't have enough gas to get through there, that could bring it back down. I'm going to save Verizon. I think it struggles to open over 50. So I think the people who are buying 50.29 right now, in my opinion, are buying a little bit too high. I think it's going to open at 50. I'm trying to call the open. I'm going to call the open right now, here live at 8:21 on the Pre-Market Prep show. I'm calling it $50 even it opens at.
I'm not gonna fade you on that. 50.29 is your pre-market high, trading at the high. 50.43 is your pre-market session. A lot of volume has traded here. Kind of
174,000.
Yeah.
So it has done enough to take out the 130,000.
Yeah.
But it's going to do a lot more. But I don't know. It's hard to chase Verizon up $1.50, isn't it? Isn't it?
It's much easier to short it and let it just come in.
I want to short it. I really do, but I haven't yet.
All right. Well, if you want, we already did once, and you lost a penny. So
I lost a penny. I don't like losing 2 pennies.
Here's a little scenario here. You open up at 50, and then you go like 50.12, and then
you go whoosh.
You turn
flush
around.
Everybody.
Yep, and you flush everybody out of that open. I would have loved playing this thing going through 49, and that's not going to happen today. It's going to have to do the opposite. So if I was trying to buy this longer term, I try and wait to come back into 49. Right now, it doesn't look like it's ever going back there. But big break, long consolidation, and now you're over $50. Haven't been over 50 since February 16th, and that's when you had a 50.46 high. So if you're holding out for some more gains on this, keep an eye on 50.46.
Jump over here. Where do you want to go? Lead the way, Spencer. There's a lot of earnings reports. We probably get about 5 more in.
All right, I'll do Lockheed Martin now. LMT Q1 EPS $4.02 versus a $3.42 estimate. Very nice beat there for LMT. We also have a sales number of 11.6 versus $11.28 billion, so beats on both those numbers there. They're also raising their outlook for the fiscal year. They raised their EPS by 60 cents and their sales by about $350 million about.
They always blow it away, Lockheed Martin, don't they? I always think we feel like we're talking about Lockheed Martin. It's trading up like on their earnings report, and they're always blowing it away. I mean, this is all-time highs, kissing getting close to it.
Oh no, it is, and that's
it is.
That's the level I want to alert our.
That's the issue, though. Yeah. Is it's not really that clear sailing. It's got to get above that like in the regular session, the 363. It's still a big level.
You hit a high of 367.27, 5,000 shares traded in that bracket. Not a whole lot. You just got to be leery of the 363 level, as Dennis mentioned. Former all-time high right at 363 even, and then 2 other highs buffeting that, 267 and 298. So, but 363 is my number and LMT.
We're talking 3M in the chat. Jazz is talking. It is down big time. And we know Procter & Gamble took it on the chin. Kimberly-Clark looked like it was going to be okay yesterday, but then took it on the chin. Well, it's 3M's turn today, and they are taking it on the chin. Spencer,
well, they missed by a penny, $2.50 versus $2.51. Sales 8.3 versus $8.25 billion. So I guess you just can't really miss in this market.
No, they don't want you to miss. Plus, these stocks are just out of favor. I mean, the consumer product stocks just are not in favor right now. Whether you're making paper or whether you're making shampoo, not in favor. So they find reasons to sell these stocks. Unless you're Coke and you got Warren Buffett behind you drinking 7 Cokes a day, consumer products not in favor. 3M down $8.73. Joel, I don't even know what to say with this chart because this is making new lows on the move. And I always say when a stock's making new lows, you got to go.
Obviously down this much, if you're shorting, Good luck to you. Could definitely go lower. I will just give you some prior support levels, and then you're on your own. 206.09. That's a buck away. That was your September 11th low, which happens to be just a few months ago. 203.16 was your 8th high, and then a major support, your double bottom. Well, Dennis will be buying for sure. Is at the 201.50 level. Two lows.
I like that better than 207.
Yeah, I agree.
You get near 200, it gets interesting, but
True.
I think there's a lot of air to 200. So 207, you could be early, maybe get a bounce back, but I watched what happened in PG. I've watched what happened in Kimberly Clark yesterday. I watched what happened in Philip Morris, and that scares the hell out of me to buy these dips on these disappointing reports. Seems like when you disappoint, sellers just keep coming in droves on you and keeps driving it lower. So I think this could see $200. I don't think it's going to see it today, but I'm jumping in here at 207. I think you're early. My opinion.
Yeah, Philip Morris, has continued that move lower, though showing some life here if you're really brave. 3 lows in the 83 handle, 350, 382, 309. That represents the low of the move. I also want to just point out that it may go up, not so much that people are trying to buy it. Seller exhaustion on that low from 101.40 or from the 01.44 close to 85.64. 46 million shares traded on Friday, 17.8 million traded yesterday, 11.8 million. So maybe there's just no one else to sell here, and maybe you get a little relief pop, but definitely 83.09. That's the low of the move.
Let's move over to the biotechs now. So we got a couple reporting this morning. I'll start with Eli Lilly, LLY, reporting great report this morning. Q1 adjusted EPS, $1.34, $1.14 was the estimate. So a very nice 20-cent beat on that number. Sales 5.7 versus $5.49 billion. So they beat the estimate on the earnings, and they're also raising the guidance. They're raising the fiscal year adjusted EPS by 30 cents on the low end of the range from $4.81 to $5.10. They're raising the sales guidance for the fiscal year as well on the low end of the range from $23 to $23.7 billion. Both of those numbers also higher than the estimate. So, of course, they're going to pump this one up.
Nice lift. And unlike the consumer product stocks, which Spinner is saying are completely out of favor, some of the drug stocks are starting to come back into favor. And I'll say some of them because we know Bristol Myers and Merck have went in the exact opposite directions here. But if you look at some of the biotechs, some of them are starting to show a little bit of life here again. Lilly was showing a little bit of life. Now it gets a little more of a pop. And obviously Lilly isn't really biotech. It's more straight up drug stock. So maybe it's the drugs themselves that are showing a little bit of life. I mean, Pfizer's been crawling up. Merck has been crawling up. Now Lilly pops over the resistance point there. So I'm not fading the pop in this one. I'm not going to fade this pop. I don't know if I'm coming here buying it, but 80.75 was the resistance point. Needs to get up and stay above that level. You got some pretty heavy bidders in the pre-market. I can see 5,000 bid at 81.01. So some people think this is going higher, and it's got some room to go.
What happened to this thing a few days? What, the 24th? Was that yesterday? No, that's today. That's today. They bounced it around pretty good.
Last night it was getting hit ahead of the report.
Yeah, wow.
It was down about $1. And I actually, when the things start going, and I'm just an opportunistic trader here. So when I see something sell off 2 points ahead of a report and I can get it, I'll be like, sometimes I'll take a flyer. I mean, you give me a 2-point lead, right? So sometimes they know something, and then that's never a good sort of scenario for you. But more often than not, it's just somebody doesn't nervous through the report, and I'm like, you can give me a 2-point lead, maybe I'll go for it. I was trying to buy Lilly last night, but it never quite got down. I think we got down low 79s.
Boy, oh boy, I don't know if was this on the close or I wonder if
it was after hours. It was offered a couple of times.
Yeah.
What did you see?
Well, even this morning it got to 77.14.
Oh, I didn't see that.
Yeah,
I wasn't awake for that one.
Yeah, you were sleeping.
I was sleeping in. Slept in today.
14. Boy, Dennis, were you around when it traded 83.45? Because that is ridiculous to have a 6-point range.
These were all small trades, though.
I gotcha.
I'm looking at the tape.
Great point.
It was just really wide.
Yeah, wow. To me, then let's just this loosey-goosey action here. I'll give you a number, 81.61. That was your high on February 5th. had a real bad day that day, closed at 77.49. That was from an 81.18 close. So that might have been on earnings too. So, or maybe drug news, because that was in February. So I'm cautious on this one. I'd be focusing on the 81.61 resistance.
All right,
Spencer.
Yep. Let's do earnings until Nick, and then after Nick, we can do some other stuff. But BIIB Biogen reporting this morning as well. $6.05 versus a $5.94 estimate. Sales 3.131 versus $3.16 billion. So a mixed report. They beat the EPS and they missed the sales number. Did Biogen.
So this is what I'm seeing, and I strike, saying biotechs come back into favor, because biotechs really are not. When I look even at the IBB, they've been leaking here. But when you look at like Pfizer, Merck, Lilly, some of the big, stronger, even it can go like GlaxoSmithKline, which I have in my portfolio if you want to go international. Some of those drug stocks are doing well, but the ones that are pure biotechs aren't doing as well. Here's BIIB getting hit here again. This is breaking down. I own this in my investment portfolio. Had it in there for a long time. I'm in from $50. It's $250 here now. I've given back some gains. I'm sticking with it though. But it does not look pretty on the chart here. And if it takes out the lows, which it appears it's going to be doing at 254.33, starts to even get uglier.
All right. Boy, this has gone nowhere, huh? We had that breakout, that run up to 370. It's been straight down here, traded down $7. Hasn't this 250 level been like the Rock of Gibraltar though? I stand corrected. Now in June we got down to 223, June of 16. So let's just go back here. 244, 245. You had some lows in 2017. Let me get a little more up to date. 48.61 was your low in June of last year. 44.28, that was your low in May of last year. So I think that's when I'd be interested.
All right, moving on to Caterpillar.
2 minutes.
Yep, Caterpillar adjusted EPS for the quarter, $2.82 versus a $2.08 estimate. Sales of $12.86 versus $11.98 billion. So beats on both the Q1 numbers. They're also raising their EPS outlook for the fiscal year and for the quarter. Oh, no,
Cat
just
is back on the prowl here. You know what, though? Up another 7. I mean, we have been running. Beginning of April, we got down under $140. Everybody was throwing it out. $138 is where it got down to. Now you're 160. You're 22 points up in 2.5 weeks. I'm not chasing it up here. I see lots of overhead supply in different areas. Got up to 164, 165 back in February. Struggled there. I'm just not coming here chasing this morning.
Little seller over 161 here. 161.39. That's your pre-market high. You had made a stab off that at 161.35. You're $1 away. That's your major resistance, or your resistance from the pre-market trading. If you're looking for more than that and you don't care about taking a profit in a 161 handle, then February 28th high was 162.34. If you're trying to protect some longs, perhaps there could be some air here under 159. That's been your low since you made that high in the 161 handle.
All right, one more. UTX Q1 EPS $1.77 versus $1.51. Sales 15.2 versus $14.6 billion. Beats there. Raising guidance again as well. Holy moly! Everyone today is beating and raising. It seems like raising the EPS for the fiscal year, raising the sales for the fiscal year.
I don't know. This thing has just got orders on. If you look at the chart from the last month and a half, this just has trades all over the place above 125, 126. It looks like tough sledding to me here too. I don't know what Joel's going to say, but I just see lots of overhead supply here too.
Yeah, I'll just pick out 126.60 was a high and 126.65 a high. This was from March and April. We'll dial in Dennis here, but dial in Nick. But BZ Tokyo just made a comment. You guys go over that insane reversal. He's talking about hog, and I mean, it is. It's just I mean, it didn't really go down though, so I don't know if I see much.
What are we talking about?
He's asking about insane reversal in hog, but to me, it looks like it went.
It's straight. Showing them 5% up on my screen.
Right. It's up 6%. I mean, it's a good lift. It's just short squeeze. This thing's been, and it's a good report. I was short it. I was short it coming in. I talked about this right off the hop. at 8:05 this morning. I forgot, Nick. This is, and Nick, I was just saying, Nick, this never works in your favor when you forget a trade on, and you're trading too many stocks. You have too many overnight trades when you actually. I had hog and I shorted it, and I was like, I got to cover this at 41.25 last night before 8 o'clock because there was an offer there. I was like, I got to cover because I don't want to go through the report. I get sidetracked and start doing other things. I never thought about it again. I never thought about it until this morning when I looked at it and I was like, I'm down in hog. I'm like, what's going on? Well, it also shows you got to have quick management. So I'm looking at that report. I'm like, man, they're going to squeeze them here today. And this is a pretty good report. And I actually got covered at 42 and 42.5. So, the one thing is that I've been very good at in my, 18-year career is dealing with the losers. And when you got a bad trade on, I could win to the hope trade and say, I messed up. I didn't mean to have that on. So, maybe I got to just hope for it to come back. No, I got new information. The report is good. They're going to squeeze them. And I'm glad that I was covered for $1 and $1.50 loss, because right now I'd be looking at a $2.50 loss and potentially more here. So you talk about your losers, because you get losers here too, Nick.
No,
and, what do you do? How do you deal with it? You don't get losers?
No, he just spreads his way out. I'll just sell this and buy this, and then just keep kind of like your after hours is spy trading, Dennis. You just put a bunch of stuff on.
I put in a long gold trade the other day. I did hedge it, so I did have a loss. But the key, like you said, is to know when to cut it. So I don't, this is a mistake I did earlier in my career where you just sit and hope things work out. That happens when you don't have set entry and exit points. So when I enter a trade, hopefully I have an idea why I entered it and where I would get out of it on upside or downside situations. So I knew to cut the gold away, but the hedge protected me a little bit, but I still had a loss there. I have Google trade this morning that will go nowhere, so I will have to deal with that. And but hopefully you have more winners than losers, and you don't let the losers eat out most of the wins that you get everywhere else.
Okay. All right. That's a good
answer. To correct the chat, I think they were talking about Hasbro, the huge reversal on Hasbro yesterday. Yeah. And that was one, that was a head scratcher right from the beginning. And I was saying it on the show. I'm like, this is down $7. It's a crappy report, but we knew it was going to be a crappy report. They already kind of got it down, and then they're hitting down another $7. I didn't get any of it really. Like, I didn't trade it, but I was just like scratching my head on it down another $7. I was like, man, I was actually kicking myself because why didn't I short it? Because it kind of said it was going to be crappy. It comes out crappy, and it goes down another $7. And I'm like, man, this market is just not listening. Because why is it down? I would have thought it wouldn't have went down on it. And then it actually came all the way back. So I double whammy myself. I was mad that I didn't short it going into the report after I saw it. And then I was mad that I didn't buy it after it was down 7 because it did come all the way back.
Yeah.
Crazy trade.
Yeah, I've seen some pretty strange situations of late, like Apple coming down so hard on like seems to be conviction. So I'm thinking to myself, what is going on there? Am I missing a piece of the puzzle? Because to me, the math is simple on Apple, but somebody may know something that we don't. So you have to be open to the fact that you might be wrong in your thesis. So Hasbro yesterday was a reaction this way and then that way, and hopefully nobody chased it one way or another.
Wild trading.
What now, Nick? Oh. What now? After that swoosh and that rebound, I'd say today's really important. I'd say it needs a blast over 86, close over 86, and greener skies ahead. If it leaks today, I would not be happy with the long position.
Right. So nothing has changed in Hasbro, in my opinion, from the technical perspective. At 88 was a neckline it needed to hold, and if it lost it, 76-ish was the target of that. So it came close to it yesterday, and the swoosh down yesterday just retested the neckline around 78. So it's not an all-in clear for Hasbro by any means. So, okay, they explained away the bad reports or the bad action yesterday, but what then? I mean, the story from here on out, fundamentally, I don't know, but technically this doesn't tell me go in with both fists. Like you said, follow through is important.
Okay, let's revisit a few trades from last week. I'm not sure. Are you out of your rig, RIG?
No, I love that thing.
Nick, way to go, Nick. I've never seen you trade a $12 stock before. How did that come up on your radar? Is that like one of your kids picked that one?
I want to give somebody credit, and I just can't remember who brought it to my attention. This is the stock that is. Yeah, I don't know who brought it to my attention. Maybe I saw it on Twitter or, whoops, it logged me out. So I don't know where I saw it. So I did see it, and the technical on rig looked beautiful. And more importantly, it was a long-term thing. So like, we wrote it up and then booked the profits. And I said, if this continues, I'm going to go back into it with house money and leave it on. So I'm saying 14 or bust on this one. I'm not getting out. So let's see what happens. I have nothing risked. I'm risking house money, so to speak. So I'm not, I just peek at it a couple of times a day.
That's Dennis and I were talking about that the other day, about just not looking at stuff and not looking at stuff in their portfolio. I don't even have a sign on to it, or else I'd be like net short. But let's move on. ESV in that sector too. Did you sympathy along with that? Are you playing ESV?
ESV, I don't even know who that is, but no. So that the
Look
answer
at the
to
chart,
that is
Nick. You can do it.
I'm looking at the weekly chart, and it's not as clear cut as beautiful as rig, but it does seem like on a weekly basis. On a daily basis, that's an insane rally. Technically, it's not as clear to me as rig, but ESV, I think if it beats if it gets to 6.2, it could reignite another leg higher to over 6.6 or 7 or something like that eyeball target. And looking to the left, that was a level from back in January, end of January, where it fell off. So if I wanted to mark it up, this is the level I would be looking at. I'm going to post it, but first 6.2 is key in my opinion for that chart. So
all right, let's revisit your gold trade here. Something that you're trying to work your way out of. Talk about what you have on, what were you expecting, and what your exit plan is.
I got out and I took my lumps and walked away. So the gold trade was looking like they were banging against the neckline around 128, and they were going to bust through it. And it didn't materialize. It was one fake out candle on 411, I think. So the setup there for me is gone. So now I'm not trading gold. Whoops, my chart went bad. So what I did is I took calls, but I took a calendar. So I took a longer dated call position where it cost me money out of pocket, but I sold a shorter dated call position against it to lower my entry cost. And sure enough, the gold rallied a little bit and then faked me out and fell. So at one point the ones I sold expired worthless, so that was good for my pocket, and then the other ones were lost. So I said, you know what, the setup is no longer there for now, plus the dollar is rallying crazy. And here's another thing. So pair trades, right? I'm sure you guys do it. So I was long gold, but I said, you know what? I'm going to hedge it by being long the dollar, because if the dollar rallies, it puts pressure on anything that's priced in dollar, like oil and gold. So in this case, that was the case with gold. It didn't hit oil as much, the rallying dollar, because oil had rhetoric from Iran and fears from rockets flying over Saudi Arabia and disruptions in the supply chain that is causing this rally in oil, which is surprising to me.
All right, let's talk about the 165 level in Apple. You talked about, people knowing more than you do. I think it's the Wall Street analysts that have been walking this stock down. Just let me look over the analyst ratings here. I'll go to my Benzinga Pro. I'll go to the calendar. I'll bring up analyst ratings, and you've had two of the last three moves have been lower price targets. That one by Morgan Stanley really had a big impact on it. I was talking about this one on the pre-market show with Dennis, and man, if you don't take a shot on the long side here at 165, then I don't know. I mean,
so
win, lose, or draw.
I totally agree. Here's what I did with Apple a couple of days ago when it fell. I can't remember if it was Friday or whenever. It fell hard in one day. I sold naked puts in it at 130 for September. I collected over $5. I can't remember exactly what. The next morning it popped. I booked them. So I'm not staying in the trade, even though I believe in it. So the question is, would you buy Apple at 130? I bet you 99% of investors say, yes, I would. So that's essentially what I did.
Yes, I would.
Yeah. So I collected my premium, but the next day it popped and I said, you know what? I can't trust this price action. I'm out. So it was a small win, but hey, it was a win. Had I been in it still, it would have been gone to flat or a little red. So I would do it again. So I'm waiting for the next swoosh down to repeat. So
I'd buy the whole company at 130. I mean, I would just do an LBO and just
take it private.
But you know what? It wasn't too long that I sold puts in Apple at 60. So there will come a situation that is even more eyebrow raising than this current one we have here. So I don't know what headlines are going to fly here. Well, speaking of headlines, I developed a crazy thesis over the last couple of days. I think I dreamt it and I woke up with it. Okay, so
I love these.
I wrote it. So if you read my recaps, you would have seen it. The recent North Korea nicey talks are most likely behind the scene pressures from China, which they have been reluctant to do for the longest time, which in my opinion could, I don't know much about it, but could be an olive branch behind closed doors to Trump with the tariff thing. So saying, we're going to give you this, not only tariffs. So this quiet period may end to be the quiet period on our tariffs. It's ongoing right now, and it will have to end soon. And I bet you the outcome of it, if I'm right, will be very mild. And if that's the case, then there should be a rally in the stock market. It may be fierce.
All right. Lots of questions from the chat here, Nick. Let's start with Qualcomm.
Why do we have to talk about Qualcomm?
Somebody has
this one. This one's been killing me, Nick. I bought this thing on the takeover speculation a few months ago and thinking, it's value there. We had Sean Udall on the show and he liked it too. And it's 4.88% dividend now and growing because this thing just continues to go down. I don't know. Maybe 50 is going to bounce here. Gone to my long-term investment portfolio. It is ugly.
Well, this is what it looks like on a weekly chart for you. So it is the good news is that it shouldn't have much further to go. I'm not sure.
I'll be broke by then.
Well, let's put it this way. If I'm long the company, I probably am not selling right here. So if I still am long it, but if you want to protect it by either selling some calls against it, if that won't hit you hard, or buy some puts, or do both to buy.
What would happen? I'd turn around and sell like 55s against it, and then next week it get taken over for 80.
Oh. So how about longer dated ones? Like if you go out to December and go up to the 60s.
Yeah, maybe. What do you think? It's not open right now to look.
I don't know, but you can look it up. I mean, let's see if I can quickly.
Not a bad idea. Right in the covered column.
So this way, it gives you time to react.
Well, if I plan on holding my junk, why not get paid to hold my junk, right?
So October 62.5 will give you $1.50 ish, maybe $1.40. I mean, it's showing $1.40. They probably won't.
That's pretty good.
But they probably won't pay you
that.
Go to December and you'll probably get $1.50 for 62.5, $2 for 60, $2.50 for 57.
Unless it gets taken over at 80.
Yeah, well, it depends.
Dennis.
Hey, you can buy shorter dated ones for pennies.
It's not getting taken over. You know what? I like that 62.5, right?
But here's the thing: if that's a worry for you, you can mitigate that. So if I sell the January 62.5, I can buy the June one for pennies. So if they would let me buy it for pennies, so even if it spikes, then you're covered in all angles.
Dennis, don't you remember all the things I taught you? Don't frown, average down. All right, Nick.
No, that's what I should be doing at 50. 50 looks good. And, trade my heat here. I like the 50 level too, but I was in too early.
All right, two
Trump
issues.
Trump got me when they turned down the merger before it even happened.
IQIY. How do you pronounce that, Brent?
It's IQ, and I know some stuff about this. This company here is obviously just IPO. It's a China company, and what are they involved in? Is this the gaming one? They got some games and stuff. I'm trying to remember.
I thought this was Netflix.
This is the Netflix. This is like Netflix in China. Okay.
Look, Google is moving. Oh my gosh, I made a buck. No,
IQ is up this morning because Citigroup came out with a buy rating, put a $22 price target on it. So IQ is trading up. Well, full disclosure, I actually am long a little bit of IQ. I kind of like this one. I don't know why.
I do too. I haven't gone into it, but I heard good things.
About going into it long. I'm into it short term. I think about going into it long term too, because I don't know. I kind of got a feeling this one could get some life here.
Yeah, imagine it'll be the next Netflix, right?
Well, and that was somebody brought this to my attention on Twitter. I think it was Scott from Twitter, and I'm pretty sure it was Scott. And he was just saying this was the Netflix of China, and talking about the market cap, and the market cap obviously is 1/10 of what the of what Netflix's market cap is. If we look at it right now, it's $13 billion. So yeah, about 1/10 of it. I don't know. There's some upside here. There's some risk too. I mean, you're involved in China.
If I wanted to go play the Netflix of China, I'll probably buy Netflix. So
50%.
But this is what they watch in China. Watch their IQ.
50% retracement here. Went from 15 and change to 20 and change, 2.5, 17.5, 18 looks like a good entry point. All right, Nick, we're going to rip through a couple more here, and then we're going to let you go. I can't feel my Facebook wants to know about ALGN.
Is this Align Technologies? Yeah, that's the Invisalign people. Are they moving this morning?
It's up $1.70, leaning on a double bottom from Monday and Tuesday, more support at 240.
So I'm looking at a level around 240, just below $240 that has been pivotal for months. So I'm not a hard line kind of a guy. It's more of a rubber band area. So that is so far, by being pivotal, it means it acts as support and resistance at the same time or a period of time. So in this case, it has been support. So until it fails, I'm going to assume that it bounces off of it. So when it hits it, I usually sell puts or put spreads if I know the company. I don't like to do it into earnings. It looks like it has an event. And the last one wasn't very happy for the stock. And the one before it was very happy for the stock. So don't know who's right and what's going to come out this time. Short-term reactions to earnings is a complete coin flip regardless of the P&L. It could be a great P&L and then nothing happens or it falls 20%. So for the short term, it's a risk. If I'm long it, I would probably protect it a little bit, but no reason to get out of it at this point.
All right, we're running out of tickers here. We're getting more tickers, but we're going to have to let Nick go in a minute. TripAdvisor, TRIP, showing some life, down 4 cents in the pre-market. Looks like a lot of support at 40, spike high, needs to clear 44. Nick, what are your thoughts on TripAdvisor?
I went long TripAdvisor yesterday on a strong candle just for a technical perspective. And this came to me from a friend of mine. And I just said, you know what? They've done the homework. I'm just going to use their homework. I like the higher lows knocking on a level of 44-ish. And if they bust through it, they're going to go a lot higher. So that's my play on it. So I bought calls. I'll probably supplement it somehow, somewhere. But I'm nervous about it because I didn't do the homework and I just followed somebody else's thesis on it. So hopefully they are correct with it. But it looks higher lows are always good, and when they knock on a roof, and if they break through the roof, they overshoot higher. So
all right, one more. I said I was going to wrap it up, but Bitcoin showing some life here. Bitcoin futures are up over 9,000 here. Found support just above the low of the move in February. I don't know. You can look at retracements. You can look at it's just like a real rally here. It's like going up a little bit, pulling back.
Bitcoin, a couple of weeks back, I said something is coming. And if I favor anything, if somebody twisted my arm, I'd buy calls in Bitcoin, but there is no such thing. So I said, if you trade Bitcoin on 411-ish, it's got to go one way or another. So either 5,000 or it's going to have a nice rally. And now it's, the descending wedge broke upwards, and now it's forming cup and handles going all. And yesterday's or the candle here still looks. If I'm short Bitcoin, I'm nervous. That's my opinion. And if they're right about tax selling, I don't know if I buy that because they say most Bitcoin is overseas, and yet this thesis about it is all U.S. centric, so it's kind of confusing. But I'm not an expert in Bitcoin, but the chart is scary for shorts, that's for sure.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins the show every Tuesday at 8:35 to share his technical and fundamental analysis on the markets. One of the best on Wall Street. Thanks a lot, Nick. We'll talk to you again soon.
One of the best on Main Street.
Oh, you're Wall Street. I can see you like putting on the suit and tie and go sitting in those boardrooms, Nick, and telling everyone where to go. I can really see you doing that.
All right.
S&Ps have peeled off the high of the morning, 88, 88 and a half. Really don't have anything up there. Well, I'd like to see this maybe mid-range on the session, and I think I might see it mid-range. That's at 26.80, just leaking a little bit here this morning. Spencer,
can we talk about Amazon now? I really
Spencer's
want to
talk about it.
Yeah, I really do. I pulled the chart up on the screen. They're launching in-car delivery today. If you have a 2015 Chevy Buick, GMC, or a Cadillac, and you have OnStar, you can get Amazon packages delivered inside of the trunk of your car. Why? Because why not? And I think that's why I was trading up this morning.
That's a good why, because why not? I want my package delivered to my car.
No, not to your car, inside your car. They will
inside
they
my
will
car.
open your
it
trunk
is going
for
to be
you.
Located in the Walmart parking lot.
Yep. Yep, they will.
It's just weird.
They will open your
that's
trunk
weird
and they
to
will
me.
deliver your package for you.
I mean, it's impressive they can do it, but why? I know you say why not, but I don't know. I have a house. Why do I need to deliver to a car? I guess we got to be somewhere.
You never know.
Maybe it is you're on vacation and you really need this thing right now where I'm at. So I'm in a hotel, but I forgot my whatever at home, and I could just have Amazon deliver it right into my trunk of my car. I guess it's got its perks.
Is that going to be the GoPro Zone drone that's going to fly and then open up? I think it's going to be fine and dandy until someone gets their car stolen. And then they'll be like, yeah, you almost got your package delivered, but you lost your car. Amazon trading up here, trading up.
That's why they only give them access to the trunk.
Yeah, come on. If you get in the trunk, you can't steal the car, Dennis. Come on. Don't you watch that?
I didn't know you could steal cars anymore. Don't they all have tracking on them? It's not. The car thieves have got to be, getting really into trouble with all the tracking systems you have now. You don't hear about major car thefts anymore. Because everything's like satellite tracked. I mean, how do you steal a car? It's not that easy anymore.
Business is not good. Business is not good to be a car thief.
No, I don't think so. Yeah. Like, what was that movie, Gone in 60 Seconds?
I was just going to bring that
Nicolas Cage.
Yeah.
He'd be out of business right now in this day and age because he'd be satellite tracked all over the place. Those cars on that ship and that movie, Gone in 60 Seconds, they're all tracked. It's hard to be a car thief.
All right.
I feel sorry for the car thieves.
Yeah, right.
Maybe they can join Benzinga's pre-market prep show and start trading the markets. You got a pop on this. Your pre-market high is 1538.39, but what I would say, you haven't even reached yesterday's high of 1548. Couple highs above that as well. So trading up, but I'd keep an eye on it, see if we can get to yesterday's high. If not, maybe a little back and fill.
There was also a question from the chat way earlier in the show I wanted to get to. Ticker ARDM. Let's do some thoughts on that.
That was
off the board on this one. Is that AR like Alpha Roger Delta Michael?
Yes.
Aerodyne.
$1.53. I don't know if I've ever traded this stock. There's not a lot of stocks out there that I have never traded before. I don't know if I've ever traded this one.
Well, the most you can lose is $1.53.
It's a call option.
Yeah. I don't know why. I would explore the reasons why this traded up to 735 and 720 in December and January. And then I would pray.
Is it drug stock?
Is it an Aerodyne? I have no idea. Help me out, Spencer. What kind of stock?
Spencer, digging that pros.
I'm too busy looking why it popped up in December, January.
Drugs?
Stocks on drugs?
Yeah, it is a drug company, just to be clear about that. Let me see what happened there.
I'll just give you a technical here, and it's kind of...
It was very low float, so that has something to do with it.
Maybe sellers are a little bit tired. They took it down to 103. Where did they take it down to? Tight range the last few days, 151, 152. Double. I play it. Breaks above 158, I'm a buyer. If it breaks 150, I mean, not a huge seller, but quiet range over the last 2 days. Let's see which way it goes, above or below. Dennis, 20 seconds left here. Any final comments on this market?
Are Earnings are going to be the driver here today. Obviously, we have so many earnings reports. We're coming to the heart of earnings season, so you've got to watch your leaders. I mean, if you're trading any tech stocks, you got to keep Google on your screen, because if Google continues to leak or something like that, it's going to drag down the Facebooks and the Apples and even the Amazons along with it, because they all tend to move together. So you want to watch your leaders here today, as always. It's kind of everything's up this morning. There's not really a lot of sectors that are down, so which is impressive. You know, when you had told me that Google, would rally $50 and then give it all back and actually be trading red this morning, I'd probably say that the market was probably not going to be strong, but that is not the case. You've got a lot of other reports really bringing us up. Some of the dogs are barking, like we said, Verizon's and the Cokes, but you got Caterpillar still trading up $5.50 here. I'd put Cat on my screen. That's going to be one of your leaders here today too. Can I hold on to those gains? Can some of those dogs like Verizon and Coke, can those hold on to the gains as well? Coke has already started to leak significantly. They got up to like 44.70, is now down to 44.10. So Warren's going to have to drink a few more pops if he wants to keep that Coke stock rising here this morning, because it's almost leaked away all the gains. But keep an eye on your leaders. These earnings days are kind of tough to trade, but it's always your leaders that'll usually lead the way. No pun intended.
Nice.
All right, 9:01 now. I'm going to let Dennis go, and I'm going to play my chat with Scott Wapner from yesterday. This is, again, regarding his book that I'm going to show up from the camera right now. When the Wolves Bite is the name of the book. Two billionaires, one company, and an epic Wall Street battle. The Herbalife, Ackman, Icon saga from 2013 onward is what this book is about, and I'm going to play that in a moment. So here's Scott Wapner. So, Scott, I first of all, great job on the book. Finished it over the weekend. Tremendous read. So, great job on that. I want to start off with kind of the beginning of your involvement in the story, which is, of course, the infamous brawl on your show. And you walk through that in great detail, but I want to ask you about what happened during that commercial break. So just to set the scene a little bit, you're talking to Ackman. He's responding to comments previously made about by Icon. You get word that Icon has called into your show. Ackman agrees to stay on. You go to break. What happened? What was that break like?
I remember. Well, first, thanks for having me, and thanks for compliments about the book. It's exciting. I remember a few things distinctly. The first is I looked down at Twitter. It was either Twitter or TweetDeck that I had open, and I remember seeing one of my colleagues at CNBC, John Fort, who covers tech, tweet out a line that simply said, "This is going to be good," and sort of anticipating what was about to happen. I was just trying to get my stuff together. I only had a couple of minutes to really sort of gather myself, and I didn't really, and maybe it's better off that I didn't have that much time to think about it. I knew that, in a couple minutes after the commercial was over, we were going to, bring in Icon at that point, and then, just sort of see what happened. We come back from break, and there wasn't that much going on during the break. It was just kind of, all right, we're going to bring him in. And I was just thinking to myself, okay, let's do it. And, they came back from break. I brought Icon in and it started. And then, I don't know, the rest is kind of history.
Yeah, 27-minute uninterrupted back and forth. One of my favorite moments in the history of the network, or really of any TV debate, quite frankly. When that was over, did you realize the significance or the uniqueness of what had just occurred?
No, not really. I was kind of shell shocked when it was over. We had this great moment. I was hoping that I handled it well. I kept, reminding myself, I kept remembering that just don't try and be part of the story. Those guys were the story. Sort of let it play out. Don't lose your cool. Remember, there was a moment where Icon sort of yelled at me, and I just sort of rolled with it, thankfully. But no, when it was over, obviously I got a million emails that started coming in. And one of my other colleagues just sent me an email that said that is going to live on. And I think it's sort of that moment it started to, sink in a little bit that it was a big moment. I heard from, the amount of email traffic that I got was certainly not normal. And, Twitter was obviously blowing up. I, heard from my bosses, my colleagues back at CNBC. So, it started to gather some steam. And later that night, I spoke with, a few of the more prominent money managers and hedge fund managers who, they made it clear that it was a pretty big moment. I had heard, that this was the last day of Davos too, as people were kind of pulling out of Davos. And I remember hearing from people who were there that they either heard about it or they were there watching it, amazed at what was going on. I think at that moment I realized it was pretty big. There was a Business Insider headline which called it the greatest moment in business television history, which obviously was flattering. But I think all of those in total made me realize that it was pretty special moment that we may not see the likes of again.
Of course, though, as the book details, there's a whole lot more to the story than just that one day. Why did you decide to write this book?
So I wrote the book because I lived the story, and I had thought about writing a book about it. Probably halfway through it, halfway through the battle, I was thinking about writing a book. It would, this would make a great story kind of stuff. You should write a book. My wife kept telling me you should write a book. And then, frankly, a guy who has been somewhat of an unofficial advisor to me and just a friend, just a great friend, is Michael Ovitz, the former Hollywood super agent. He told me you should write this up. You should write a book. You should get published. It would be good for your career. It would be good for you personally. And that really sort of just put me over the edge. So I finished the meeting with him. I called up my TV agent and said, I want to write a book. And he connected me with the right person at their firm who handles the literary department. And we wrote up a pitch and we're lucky enough to get a publisher to buy it.
One of the things that I think makes this story so interesting is, of course, it's centered around Ackman and Icahn, but I'd almost forgotten that there was, other major players involved here. Dan Loeb makes an appearance. Einhorn is there. What do you think it is about a Herbalife that sort of attracted so many of the biggest names in finance to the same story?
It's so funny, right? You focus so much on Ackman and Icahn, but then when you step back and you realize, all of the cast of characters who made a cameo in one way or another, you mentioned Einhorn and Loeb, and don't forget there was, George Soros by his firm, not him obviously, but his firm, Robert Chapman, and everybody sort of had. It wasn't that Herbalife was so much of a draw as much as, maybe Bill Ackman was for a few of these people. Not that they would have made the investment necessarily, on the merits of Herbalife, but Ackman, for one person to another, kind of prodded them in. Not Einhorn, because Einhorn was in before Bill ever got involved. And it's funny that I'm standing here at the Ira Sohn Conference because I remember after Einhorn had been in, everybody showed up here expecting him to do a full takedown of Herbalife, and he put up MLM on the screen at the Sohn Conference, and we're like, okay, here we go. And it was Martin Marietta Materials, and he was, just messing with people. But it sort of showed you where maybe the whole thing was going. And then, Loeb emerged and then Soros's firm emerged. I think they looked at the opportunity to make some money, and for some of them at least, at the same time to, mess with Ackman a bit. And I think that became a thing for a while. I really do.
Just more about being in, more of an ego thing than maybe anything else. Did it surprise you at all in the course of researching for the book? Did it surprise you the length that people were willing to go to win? You have secret dossiers, you have desperate emails to the head of the FTC. I mean, it took like 3 years, right? So did it, or more? So did it surprise you the length that people were willing to go to?
Oh, totally. Like I said, I lived the story and I reported on it a lot, but I certainly had no idea to some extent the lengths that people went, especially Bill. Bill said he was going to go to the ends of the earth on this, and he certainly went far and tried to do whatever he could. His whole thesis was based on the government, intervening and shutting Herbalife down. But that's the way that the investment was going to work. Certainly, for an investment of that magnitude, $1 billion. So, he did what he had to do, and he was going to push it as far as he could to try and get the government to act. And I try and lay out in the book various things that he did, and letters he wrote, and emails he sent, and lobbyists he hired, and meetings he took to try and press his case. Herbalife talks in the book in a way that they have never really opened up before to, share with me sort of, their side of the story, what they were going through, and how they tried to fight back against an enemy they really didn't know that much about to begin with. Maybe you had a person or two in the executive ranks who had heard of Bill Ackman, but that might be even a stretch to say it could be two people. So, they had to figure out who they were dealing with. And, one of the ways they did that, which I was very surprised to learn, and that's why I wrote about it in the book, was this FBI profile that they had prepared. They had a woman who used to be in the FBI field office do the lead on a profile of Bill Ackman as an individual, as a human being. Who is this person? What are his tendencies? What can we learn from doing a full forensic psychological examination of this guy? And that in and of itself is pretty incredible when you think about it, that, people, their short sellers are nothing new, but this was such an extraordinary case, and it drew so many media headlines and really mushroomed into this epic thing that Herbalife had to do unconventional things to try and figure out who they were dealing with and how to better deal with him. And the FBI profile is a perfect example of that. I don't know that you'll see that ever again, but it was incredible that they were willing to spend, $100,000, as I say in the book, to have one of the nation's foremost forensic psychologists come up with a profile of this guy. I mean, you're talking about a guy who, does this for, the FBI for serial killers and school shooters and things like that. And here they are doing a forensic examination of Bill Ackman, of all people. So I thought that was pretty incredible.
Yeah, I thought that was one of the more interesting things or perspectives, really, is especially, Michael Johnson, right, is not a person who's of this world, doesn't have a background on Wall Street, and sort of detailing his anxieties or his, through how this happened through his eyes. I thought that was interesting, because he was an outsider. He was an insider, but in like an outsider's mindset, right? An insider by default, right? By his position, but he didn't know who Bill Ackman was, and he had only tangentially heard of David, of Einhorn and Icon. So, how do you think he, dealt with all that?
I think it was difficult. I really do. I think he was blindsided. Clearly, he's out there 3,000 miles away from Wall Street, running his company, and then here's that Bill Ackman is assassinating his character and that of the company. And I think it was difficult. I don't think he really knew what to do. You know, he's a incredibly intense person. So his first inclination was to fight. And, you know, that's what he did the day that he picked up the phone and he called into CNBC. And, you know, he was pretty fired up. He was really fired up. And I think, you know, it took a team of people to kind of, you know, calm him down a bit, figure out what they were dealing with, and, you know, go from there, try to run the company at the same time that somebody all the way across the country is trying to tear it down. I think it was a difficult period, but it was certainly made a hell of a lot easier when Carl Icahn and Dan Loeb got involved, right? Loeb had emerged first, and then Icahn did. So, you know, having those guys having his back, so to speak, definitely made the fight easier. They could do a lot of the, you know, the punching and moving around and attacking back by virtue simply of their investment. But, you know, it's hard. It was definitely a struggle for some period of time for Herbalife, but, you know, they somehow got through it. They somehow got through it, but I think it was exhausting for everybody there to have to go through something as epic this was, especially for as long as it lasted. Now, these things don't normally last 5 years. This thing lasted 5 years. And it took a lot out of everybody there. But it would have been much more difficult, and it probably would have had a different ending had, you know, Loeb and then Icahn, more substantially Icahn, obviously, not emerged.
You know, I think you're right at the end of the book. You write sort of like your high level thoughts on everything and what you took away from all this. Did this story change your perception of activist investors?
Not really. I mean, what I tried to do there was take a step away and look at the higher level issue. I think most of them mean well, and I you know, obviously the results speak for themselves. Most of the activist investors who are the marquee names are the marquee names and have had the kind of longevity they have because of their success, right? If they weren't successful in doing what they've done, then they wouldn't be where they are. But I do think it's important to take a step back and sort of look at what it means overall to society and to the companies themselves. You know, the companies are forced to spend tens of millions of dollars often to fight back, to defend themselves. There's, you know, that's an impact on the business, on the psychology of employees. And it all plays an interesting role that we don't really talk about that often. We sort of look at it as a football game. The score is up at the end of the game. X investor either won or lost, and everybody moves on. But I thought it was important at least to take even, albeit briefly, a look at what the larger impact of all of this is. But I don't really have a different perspective on activist investors. I think the ones who are where they are there for a reason. And I think they, by and large, do good and credible and quality work. And some of them are, you know, more right than others. And sometimes they get it wrong. And most of them are able to admit it and move on to the next thing. I think what I also hope people glean from the book is a look inside the psyches of Icahn and Ackman to get a better idea of sort of what drives them, their flaws, their highlights, and how they have become who they are as investors. You know, the Bill Ackman today is not the Bill Ackman when the story started. He was on a different platform. He's suffered a pretty mighty setback. Not only between this, in the big scheme of things, this will be maybe the most public thing people talk about. But, you know, the Valiant thing was devastating, and that happened around the same time, which is why I get into that. And Icahn has, you know, rolled on. He's transformed himself. He has, you know, changed a bit with the generations, but he is still one of the most successful and featured, if you want to use that word, investors of our time. And he's done that because he knows where opportunity knocks, and this was a case where the door was just opened right to him, and he walked through it.
From conception to completion, how long did the book take?
From the time we sold it until I finished it was a year. It took me about 6 months or so to do the research and the interviews, and it took me about 6 months to write it. And then, several months of editing and copy editing and all the machinations of that. But from the time of selling it to the publisher to turning it in was June of 16 to June of 17. And, it wasn't an especially difficult book to write because I had lived so much of it. It was just figuring out the sort of narrative that I wanted to tell, and the narrative kind of drove itself. It was just a matter of filling in a lot of the details that I didn't know and flushing out a lot of the characters. As you notice, I get into pretty great detail about how the Soros investment came about, which even though I broke that story on CNBC, I had no idea what the backstory really was and who was instrumental in making that investment and how it all came about. And I give you a lot of color into how that whole thing happened. I had no idea how Loeb got involved. Now we obviously know. I lay that out in the book, which people can see. And I really had no idea how Herbalife dealt with the whole thing. And it took me a while to get under the hood with them. They were very cooperative with this project, and it sort of helped. It obviously helped me get a better idea for myself and to share it with readers on who these people are and what they've done with their company, and things they've had to overcome over the years. There was a lot to overcome, but they've obviously done it. The market has voted on where it believes Herbalife is as an enterprise, and the stock is around $100. So it's basically a double from where Ackman began shorting it, 5.5 years ago, which is it's remarkable the twists and turns that have taken place. I was just trying to get on that road and try and get as many critical, colorful details as I could along that ride.
All right, last question, Scott, and I'll let you run. I asked this of everybody, but what is your morning market routine like?
Ask me one more time.
What is your morning market routine?
Oh, I get in, a few hours before showtime and do as much research as I can. We try and plan out, what our show is going to be, what our lead of the show is going to be. Most important part is sort of figuring out how you want to kick things off. And we have a good meeting in the morning with our producers and sort of figure out what we think the tone of the day is and what the biggest story is and in the way that we want to frame it. And then we go through the motions of doing that, whether it's, calling analysts, and I'm looking at a lot of research and thinking of interviews that, would be relevant to the topic that we want to discuss and the right questions that I want to ask and all that stuff. And then the light goes on at noon and we do our thing.
Are you looking at Twitter a lot, or is it notes, or is it specific outlets, or everything?
No, it's Twitter. I'm on Twitter. I'm on TweetDeck. I'm on TweetDeck all morning.
Right.
I'm on TweetDeck during the show. I like to have a real-time sort of connection with our viewers and also with the news. I think one of the best parts about our program is, we're real-time in every which way possible. We're not only following the market, but I'm following what people are saying about our show, what news is happening at the moment, and trying to weave anything that's relevant into the program, reading, blog posts or things I see tweeted out, whether it's from you guys or whoever that I think would be beneficial to read. I'm trying to suck in as much information as I can to frame the conversation with the people on the desk in the best way possible. I think, try and do that every day.
All right, Scott Wapner. He is the author of When the Wolves Bite, out today. Actually, we're taping this on Monday, but this will air on Tuesday, and that's when the book is out. So you can get the book on Amazon. Scott, great job on the book, like I mentioned. Good read, and thanks so much for the time.
Thank you so much for having me. It's a pleasure.
All right, that was our chat with Scott Wapner. Hope you guys enjoyed it. Check out the book again, When the Wolves Bite, on Amazon. Hope you enjoyed the show today. Hope you join us again tomorrow. But that's it for us. So have a good one, and see you folks on Wednesday.